Welcome to Women on Wealth. And today's discussion is a critical one that I think will really affect all of us. And that is addressing life-changing events and transitions and the impact on health insurance coverage. And to lead us in this discussion, we have Ann McGuire, is the founder of Healthcare Pathfinder, a health and long-term care advice, advocacy, and management firm. They have a passion for helping individuals, families, and employees find, understand, and maximize their insurance benefits and advocate for their care, which I think is so critical. She's a registered nurse and certified case manager with over 40 plus years of experience in the healthcare industry. She is a member of the Case Management Society of America, Aging Life Care Association, and the Alliance of Professional Healthcare Advocates. Her bio goes on. She serves on a lot of local boards as well here in Connecticut. So Ann, welcome to the podcast.
Well, thanks for having me, Jelena. This is great.
Yeah,
I'm so old.
I know. I was trying to figure out if I should use the word plus, which was in your bio, but it's where I'm excited for you to share your wealth of knowledge in your space. And you have basically 10 life-changing events and transitions that we're going to talk about today. Everything from divorce, loss of a spouse, retirement, and then the last two are going to address adult children, correct?
Correct.
Yes, I'm so excited about this. So can you first talk about why you think this is so important?
Well, I've lived it. I've gone through it with so many clients, even patients. Just really, people need to understand their health and long-term care insurance benefits and understand the choices that they make in obtaining coverage. And, people often, they don't realize the importance until something happens. And
I'm sure it's common they come to you too late, correct?
Often after the fact. I mean, my sort of new motto is be prepared, aware, prepared, and proactive.
Yeah. And
so I'm trying to really get that message across of being really aware and prepared, but the aware of your benefits and your coverage, aware of the choices you're making, and then prepare for what's to come along the way. And then proactive. When something's happening, you really need to be an advocate for yourself or have someone be an advocate for you.
Absolutely. And I know you have some stories that you'll share along the way with the 10 events. So let's kick it off with the first one, which I think you have is a significant illness and new diagnosis.
Mm-hmm. Yes. So, that's the clients who come to us, and they unfortunately tend to be later, where they did get the new diagnosis, say, for example, a client with ALS and started going all over the country, trying to get the diagnosis confirmed and going to all different doctors, not knowing how much it was going to cost, just going to see anyone, and paying for prescriptions and things of this sort. And it was just really sort of, once I got involved, we were able to sort of get things a little bit more under control and realize what the insurance was going to cover, and able to submit claims and things of that sort. But it's really, if people, when they do get that new diagnosis, is sort of ask a lot of questions and really trying to understand your insurance in advance. I have another client who out in Utah was a horrible car accident, 53-year-old mom with 4 daughters under the age of 30.
Wow.
And, they just kept going along the way the mother couldn't advocate for herself at all. So they were just going along with the healthcare system and their insurance company to get to a point where she was just unfortunately not going to survive.
Sure.
And if they were aware of really advocating and having someone to sort of protect the mother, they wouldn't have ended up where they were. And now they're actually, mom's home and she's doing great. But I think, unfortunately, there would have been a worse outcome.
Absolutely. And how do you prepare people to ask the right questions? Can you talk a little bit about that?
Well, right. So, again, it goes back to sort of originally getting your coverage and understanding what it is. But if depending on the type of coverage you have. So if you have coverage through an employer, it's great to go to your HR department. If you're going through a difficult situation and you're having trouble with your insurance, I know sometimes people feel mixed on that, but HR is they're confidential, so that would be a safe place to go. But
Okay.
even with the doctors and providers, is not hesitating to sort of ask, is this all that I can get? Is this, if my insurance company is denying this, does the doctor want you to have it?
Okay.
If the doctor wants you to have it and the insurance is denying it, then ask if it can be appealed, and call up the insurance company, and work with the providers. But they're not necessarily going to be the best advocates for you. You really need to advocate for yourself. Other questions: if you're paying for things that are very expensive, you should be questioning that. So, for example, this client with ALS was going to an out-of-network provider who had a pharmacy in their office, and they were just paying for the medications, not thinking that they could be covered under, go to CVS and get that prescription, which they ended up saving $5,000 per month on prescriptions that they were paying for.
Yeah.
So it's like you want to trust everyone who's in the healthcare field, but you really have to be challenging to a certain extent when you've got a significant diagnosis.
Absolutely. No, thank you for going through that.
Or illness or, accident.
Yeah. And what about a transition that I think we all go through, which is retiring?
Yeah.
I hope we all go through it.
So the retiring side, it's sort of, I'll talk a little bit more about it, even with the divorce side, is really assess your options on the healthcare side before you retire. Before you retire. Yes. We actually do a lot of consultations with people who are thinking ahead about retiring. And it's not just about, turning 65 type of, planning. Really, 50-year-olds retiring and not thinking about the options of all they would, have is the individual market after COBRA.
Of course.
But so COBRA is your extension of benefits after you leave work. But people often just look at the price and they say, this is so expensive. And then they don't realize that the benefits are something that you cannot get necessarily in the individual market. Sure. If you work for a big company, they have a national network of providers, so they can go all over. If they have kids who are covered under the plan, same thing when they go to college or, wherever they are, if they're still under the parent's plan.
Right.
And then the other side of thing is what to ask for. If you're in a position where you're retiring, there's benefits you could be asking for, as far as paying for the COBRA, or say you end up you're finished up your 18 months of COBRA, which is standard. Mm-hmm. You can ask for an extension. Right. So those are the types of questions you need to ask and understand. And people will look at the pricing, but when they look at the benefits, it's going to be so significantly different. With a deductible, maybe under a group plan, might be $100, right, for out of pocket $100 expense, where it's maybe the same premium for your individual, which has a $6,500 deductible.
Right.
So you may be paying $1,000 for the no out of pocket expenses, basically, national network, to paying $1,000 for a $6,500 deductible, and you only have in-state benefits.
Right. Absolutely. And
so extreme.
And how far in advance should people think about planning for this before they retire?
I think they should do it before they decide they're going to retire. Seriously, because if you get so far down that pathway of I'm retiring, that it's sort of hard to turn back, but to realize, and I think it's really important for people who don't have a lot of options, that all those benefits, not just health, but all those benefits that you can get through your employer that's important.
Absolutely. Critical.
Yeah.
It's not just the Social Security consideration when they retire, right?
Right. And it's another situation with a client of mine who retired right before he was turning 65, but he had a significant diagnosis, and the company was actually, they paid for him his COBRA, and then he even continued with it even when he went on Medicare. So unique situations,
sure,
but you just don't know if you don't ask.
If you don't ask. Yep. Back to the questions. So
yeah. And I'm just going to go back quickly to another situation, going back to the significant diagnosis, is my client with ALS. He was actually retiring, if you will. He could no longer work, but he didn't tell them that he had a significant illness, which was ALS, which he was actually qualified for disability. And he almost lost all of those benefits. And fortunately, I kept saying to him, can I call your HR department? And when I called them, I couldn't really, I said, do you know why he's retiring? And they said, no. And I said, oh my goodness. If it had gone a week longer, they wouldn't have been able to go back legally.
Right.
And reinstate his benefits.
Right. That timing is important.
Yeah. And conversations are, I know that people try to hide, they don't want to disclose too much, but in this situation, it was,
it can be very impactful. Mm-hmm. Yeah, that's great. Thank you for sharing that. And what about turning 65?
Yeah, well, that's a whole nother ballgame too. For some people, it's very simple. For some people, it's very overwhelming. And I could, as you know, present for, an hour or two about this. And I do consultations just on these transitions with turning 65. But it's really important to know the time frame of when you're turning 65, of having 3 months before your 65th birthday, and then the month of your 65th birthday and 3 months after. So 7 months to make that transition.
Right.
But what if you're still working? Do you have to enroll in Medicare? It depends on the size of the company you work for. Right. It also depends on it. Well, the size of the company is significant. And then if you're still working, do you want to enroll in Medicare Part A? And that's a whole nother, like, trying to understand Medicare Part A and Part B and so Part C and Part D. It's just very complicated and understanding that. So just to keep it simple on that side is to, again, if you are still working, talk to your HR department to find out if you have to enroll.
Sure.
And if not, do you have a health savings account? Can you enroll in part of Medicare with no premium? So there's just all those questions to ask related to working. And then if you're not working and Medicare is your next step, start 3 months before your 65th birthday.
Sure.
Because sometimes what you have to do is initiate that enrollment through Social Security.
Right.
So if your birth certificate doesn't match up with your Social Security information, it can take up to 3 months plus, which I just went through with a couple of clients. And they were born in the US, most of them, and something was wrong. So it's really start early.
Right.
And then understand what the choices are along the way.
I mean, even just making sure the documents match, right? Is so critical.
Exactly. And so many people go on to the Social Security website and they get locked out. And then, especially with COVID, it was a nightmare. And a lot of the offices are closed. So you have to wait for appointments, which may go 3 months out.
Right.
And I've said to, I'm talking Social Security office saying, but they need their supplement prescription drug plan, or they need to go on a plan.
Right.
And they, this is the way it is.
Absolutely.
So you've got to plan early.
Yeah. So important. Thank you for reviewing that.
Yeah. And that's why we actually have offered this. I told you this class of turning Medicare enrollment done right is because of making sure that people, cover all the steps along the way and you should be thinking of long-term with Medicare, and also understanding if you're going to be moving to another
Sure.
Or you have other homes in other states. So
Yeah.
those are things to think about.
The Medicare is just one of the biggest pieces. It always has the most concerns and questions. So, and I will ask you about that class at the end, because I do want to talk about that.
Although I don't think it should be the biggest, because there's just so many other impacts along the way that people just don't think about.
Absolutely.
Really don't.
Absolutely.
Yeah. We'll talk about the kids later.
Yeah, well, the kids are yet to come.
Yeah.
So before we talk about the kids, let's talk about what affects half of us out there, which is the divorce.
Yeah. I've been doing this for years, and the divorce kind of questions related to insurance has really come up a lot lately. And
something you don't think about when you go through the process.
Well, prior to the Affordable Care Act and, Obamacare, people who went through a divorce, COBRA was their only option really after. But then if any pre-existing conditions and things of that sort, for some people, the only option was maybe moving to another state to get coverage. But anyhow, I'm going sort of off topic here. But again, just like retiring, before you go through the divorce, you should really assess what your options are. What are your current costs? Yeah. What has your experience been with your healthcare coverage? With the majority of the clients we work with, it's usually the spouse who's losing, the benefits.
Right.
And but what they need to be thinking about, what we'll do is we review their coverage current and compare it to future options.
Okay.
And we look at the costs, and you should look at the costs that you're going to have going forward. If you had this corporate plan and you're losing that, and you end up with no out-of-network benefits, meaning you're going to pay everything out of pocket, you should factor in those costs.
Absolutely.
And think of long-term care and Medicare. Like, what are those costs going to be? What are the premium costs going to be? And your out-of-pocket costs. Right. You won't have, someone to take care of you. And that's where I think it's important for people to think about long-term care coverage. Because there are benefits of, if you get along with your potential ex-spouse, you can get, both of you can get long-term care policies and a discount for, maybe 20%, and you still get to keep the policies even when you split.
Right.
So, I don't sell any of this. Yeah, I don't sell any of this, but it is just something to think about of what you could have someone pay for if you're in that situation where maybe your ex-spouse is going to have the extra money.
Yeah, absolutely. And what about the alternative, which is, the unfortunate loss of a spouse?
Well, yes, the loss of the spouse, it's sort of, we've had a client recently, and she lost her spouse, and he had sort of benefits that she did not pay attention to any of the information that they were sending. Mm-hmm. And so what she ended up doing was not paying premiums for coverage that she could have continued and maintained. Mm. So that's one of the hard things with, when you have a loss of a spouse, you have usually, depending if someone's working, the spouse is working, or, depending on, I'm talking about a situation where, the spouse who is the widow or widower has lost coverage. COBRA is, the best option. And that's the same thing with divorce is usually COBRA is the first option, and right. Then there's, and it's 36 months that they are eligible for benefits for both divorce and loss of a spouse, which is similar. Right. But often what people do, again, is they look at the cost and they think, oh, COBRA is so expensive. But then when they start to look at, they often just make that change because it's so expensive, but they don't realize the restricted benefits in the individual market. Sure. Again, just because we're in Connecticut, there's one plan that has out-of-state benefits. And this is the first year that it's actually had national plan, but it's a very limited type of plan, but at least it's there. New York State only has HMO. Mm-hmm. So meaning that you can only stay within your network. There's no out-of-network meaning if that doctor isn't contracted with the insurance company under this little provider group, you go outside of that, there's no coverage unless it's an emergency situation or something of that sort.
Yeah.
So the message on the loss of spouse is to just be, even be aware of what the documents say, even when you're alive, like what happens, if you are the surviving spouse, if someone has a significant diagnosis, is to start looking at those things early. Absolutely. So that you know what the options are.
And even just to look at it at all, you must find the same situation that I do, where I talk to so many that never looked at this. They never looked at their financial statements. They just weren't aware. And I get it. We have busy lives. They relied on their other half. And then all of a sudden you're in a divorce, you lose the spouse, and you're forced to now get caught up to speed. And it always turns out to be a sad story.
Right. And that goes back to the being aware, prepared, and proactive.
Exactly.
But again, and that goes back to the making sure you have all those legal documents in order. That's one of the first things I say to usually adult children, is that do your parents have everything in place?
Sure.
And then they start thinking about themselves.
Yeah, exactly. Yeah. And you also bring up another important point, which is every state is so unique and different. And I think that's interesting because we do live so close to the New York border, being here in Fairfield County. And I know someone up in Eastern Connecticut that was looking to move to Rhode Island just because of the differential. And so I think that's it's important to be aware as well of
exactly
of that. So thank you for mentioning that. So we've talked about significant illness, retiring, turning 65, divorce, loss of spouse, as if that's not enough. But, I got ahead a little bit in terms of the states, but let's talk about the moving piece.
Yeah. Well, I was going to say, we just segued right into the moving side, which is it can be so significant as far as, having two residences for some people even, but, just even understanding, for example, and I'll just go into the Medicare side, is state of Connecticut is so great because you can change, and you have to understand Medicare, but you can change your Medicare supplement plan really any month in the state of Connecticut. You go down to another state when you're moving, you can, or I'd say, depending on what state you go to, but some of them have pre-existing conditions, exclusions for these types of plans. So it's just not all the same. But it's I guess the other important situation, this often impacts adult children moving, but is just making sure when you do move that you do transition, you have sort of a 60-day window to make that transition of your insurance. And you have to show proof of change in residency status, proof that I just went through this with a woman who actually is divorced, who ended up moving to another state, but had to show proof that she lived in another state and that she has now residency. So, and it had to be within a 60-day period of time.
Of course. Okay.
For that move. Yeah. With Medicare, or even moving out of your network with your insurance company, even within the same state, that can be an issue. So I had a client who was coming from Massachusetts, receiving home care services, and the insurance company was denying it because it was out of network. And so we had to be so quick to make the change in the plan, but the plan wasn't going to become effective until the end of the month. So you sometimes have to be timing your move,
Right.
But
wow,
in this situation, it was an elderly person who was moving to a new community, assisted living type facility. So that was a major stress and impact because none of the doctors were in network.
Of course.
Yeah, of course. So yeah, it's just moving and thinking, again, if you have a company that's a large company that has national coverage, it's not an issue. You don't have to, you just obviously have to look at your coverage to see which plan did you choose. because you may have to find new providers who are in network.
Right.
So that's the most significant thing is, when we do review the policies, when we're looking for someone who's moving or changing policies, the first couple of things we look at is, who are your doctors, and checking to see if they're in network. Then we start looking into, the premiums and the costs, but we also look at the prescriptions. If you're on significant prescriptions, which plans cover it best, which have the best deductibles related to your costs and where they fall under your plan.
Right. There's so many moving parts.
Yes, exactly.
Yeah.
So those are, that's pretty much, again, I can also talk about, people who are moving from other countries.
That was going to be my next question. Yeah.
Yeah. So, just recently had a client who they moved from Europe, and he actually they married for 3 years. So he became a citizen of the United States. He's older than 65. I kept telling him, well, that's a special enrollment period, if you will, meaning that you're eligible to enroll in Medicare. Kept calling Social Security, and they said, no, he can't enroll until this other enrollment period because, he's older. That was very confusing. The point being is we called 3 different Social Security offices, and they kept saying, no, he can't enroll now. 2 months later, after he sent in his application, even though they said he couldn't, he got his ID cards in the mail. And so then and he was paying for all this other coverage as being an expat. And so then he had 2 plans, been paying, he's got to go back and pay premium going back 2 months. But again, I knew the answer, and I couldn't get anyone to support me in the getting the correct answer.
Keep asking.
Yeah. I always say thank you very much, and you hang up, and then you pick up the phone, you call and ask for another representative who can hopefully give you the right answer. But you have to know the answer to get the right answer.
Exactly. Yeah. No, that's the important piece too. And I think there's so many of us that don't know that right answer, and we would never have pursued after the first call.
Right.
Yeah.
And I have another client, she's younger, who is a U.S. citizen, but she also lives in another country. And she's, we're researching her benefits because she's going to have a baby, but she's going to probably have it here. And it's just very confusing, and understanding what her expat plan covers, and, how long she stays in the U.S. It's 180 days. And how do they count those days? And so again, it's just asking the questions and finding the right people who can, give you hopefully the right answer.
Yeah, absolutely. And we've talked a lot about COBRA through the different transitions.
Yeah.
What about when COBRA ends?
Yeah. So that's the other part. Times we were talking about when you're choosing to whether or not to go on it.
Yeah.
So when it's ending, there's a lot of times where, and I've got a couple of examples where, again, an executive at a company left, she sort of retired, had her 18 months, but she called me well in advance. And I said, well, call your HR department and see if they'll extend it for another 18 months and see if you can get 36 months. Mm-hmm. And they did it.
Okay.
The other scenario is, again, talking about kids, which I just had a client recently who her daughter's turning 26. So people have sort of gotten to know that when you're sort of aging off your parents' policy. So she's 26. She was an entrepreneur. So she was still under her parents' policy. But I think it was also, it was the better policy. So she was on her parents' policy, turned 26, and she has the policy is based out of New York, but she lives in California.
Okay.
But it's a national policy. Meaning it's got a national network. So there was an option as to whether or not she could end benefits at 26 and go on COBRA, or they could, well, it's basically extending the coverage. She was able to extend it until her 29th birthday.
Wow.
So there's I think 8 states that 8 states provide coverage beyond that 26th birthday.
Okay.
And some, like New Jersey, I think it's like 30 or 31, Pennsylvania, 29, New York, 29, Florida is like 31. So you've got to understand that. But it depends again on your company's insurance, because if it's a self-insured plan, they don't necessarily have to offer that extension for the state. But anyhow, this daughter had significant illness or diagnosis, was going to doctors all the time. She was living in California. And they had been trying so hard to find the right individual plan. Yeah. And then they called me and I said, well, I kept saying, could you call and check on whether or not you could get COBRA? And anyway, state of New York, they were able to extend it to 29. But in other situations, the 26-year-old, if they don't have a job where it would offer benefits, they could be eligible for COBRA.
Okay.
Their own COBRA.
Right. Yeah. Okay.
Yeah. So even if the parents are on COBRA and the child is on COBRA with the parents, they can extend when they turn 26, they're eligible for 18 more months or whatever it is of continued coverage.
Okay. That's great. Thank you for going.
I don't know. I know this is so confusing, but the point is just ask questions.
Exactly.
Yeah. And a lot of HR department, you have to be careful there because a lot of them, they don't know the answer.
Yeah.
So, and even with Medicare, they often don't know the answers. So you really have to make sure you're looking for the answer to your question.
Absolutely. And if they don't know the answer, then what do you typically recommend outside of maybe calling you?
A lot of people just don't know. Yeah. Unfortunately. You could, for Medicare, you can call, Medicare has SHIP, or like in Connecticut, they have Southwestern Connecticut Area on Aging.
Yeah.
So you can call them. I think they're pretty good with transitions with someone turning 65. But as far as the COBRA side, it's really calling insurance departments, advocacy, like there is the Office of Healthcare Advocacy, state of Connecticut. They're actually, I call them a lot to help with clients for an appeal. If you have an issue related to your insurance, it has to be a in-state plan. But most states do have some type of program like that.
That's great.
Someone has an issue, and that's really related to more of the advocacy side, but they have often answers to those questions. There's the Medicare, the association. What's it called? I'll come up with the name, but it's basically the Medicare advocacy. That's great. You can call them and they'll give you advice.
And Anne, I think you have one more before we talk about adult children, but let's this is a big one, of course. Let's address aging and long-term care.
Right. So just even with the focusing on the health insurance side is often what the adult children often find. They say, oh, my mom's in the hospital and they're saying, she has to go home and we can't take her home. She should really be going to a skilled facility. And often that's the first time I hear that. I say, what kind of plan is she on? And it's, I hate to say it, but it's often the Medicare Advantage type of plan. And that's a plan that is managed Medicare, meaning it's that they have to get prior approval for everything, or, like our insurance, if we need a test, like a CAT scan or something, they have to get prior approval for those tests, unless it's an emergency. With the Medicare Advantage plans, it's very similar, where there's the original Medicare, where the providers know what the benefits are. So they actually manage, they really kind of manage the benefits, knowing what's covered, what's not covered. They don't have to get prior approval. And with these situations, though, it's you often have to appeal. And so, again, they're sort of relying on busy people in the hospital or at facilities that are too busy. And they say, oh, do you want to appeal? And they're like, I don't know, sure. And then they throw in an appeal and it gets denied. And then they say, oh, shoot, it's, you have to pay for it. Or,
right.
So actually, I have an example of a client just recently found out we basically, she was getting billed $27,000 for a denial in a skilled nursing facility. And it was exactly that scenario. She had, how old? She was working, had work benefits, and she basically ended up having aneurysm, went into a skilled facility after the hospital, and she wasn't making progress. So the insurance company said, sorry, we're not going to pay. They sent in this appeal. And then I think probably the next day she started, walking and working with physical therapy, basically. And, 6 months later, she's discharged to the community. And the daughter came up and said, we're getting these bills. Can we do anything? And so it was a matter of appealing it between the insurance company and the provider. And they kept saying, we need to appeal it. And I said, no, you didn't do the right thing. So it was basically making the provider and the insurance company talk. And I said, take the person, the patient, the member. I said, you take the member and the patient out of this. This is your discussion. And ended up saving her $27,000.
How critical, just because they weren't talking.
It's just they didn't know what to do. And they're like, each side was telling me something different. So to be honest with you, if you didn't have me, honestly, being an expert in the field, she would have been writing a check for $27,000 because she didn't want to deal with it anymore. It was causing so much stress.
That is the last thing you want to think about is, during these times.
So that's what, the going back to the, aging long-term care. I mean, I'm talking about general insurance, but this is a sort of an older adult who is in the hospital, and it's really needing that, making sure, again, the insurance was very confusing. She had 2 policies under her employer. One was hospital, one was outpatient. It was very difficult to figure out who's doing what, to, understanding what your benefits are.
Right.
And understanding the appeals process and the advocacy side. So, and then on the long-term care insurance side, submitting claims can be very complicated. And again, you really have to be pushing to get all the information in and not taking this isn't covered when you think and it should be covered. So it's understanding the policies, having the policies reviewed so that you understand them.
Right.
Recently had a client, it was a son-in-law in California coming out to visit his father-in-law. And he said, I don't understand his insurance. What do we do? And we, it's basically reviewed all the insurance. So he understood how to manage his father-in-law's care based on knowing what the benefits were, going to the right place, getting the right care providers, all of that from the health and long-term care insurance sides.
Okay.
So I'm sorry, this is at the point where probably your eyes are glassing over and it's like, oh my gosh.
Well, I sit here and it's similar to what we say all the time. It's, if there's ever a time to have an expert, right? It's during these transitions, these emotional times. And you sit here and think about how much money you could potentially lose just by not knowing the direction or the questions to ask or having someone be your advocate, right?
Right.
So,
and as I say, most of the time, it's not even money. It's like majority of people say, it's like creating that peace of mind to know that you already have these things in place.
Yeah.
That you kind of know how you're going to handle things.
That's sometimes the most costly element to people. So that's great. You have two more, which I think are incredibly important. I know that there's going to be an interest from listeners out there when we talk about our children as they become adults. And I think you kind of break them into two. If I'll let you kind of explain that.
Yeah, and they'll kind of merge, but just talking about a child turning 18. So often people think about them, going off to college or moving away. But the most important thing, regardless of where they are, is that once they turn 18, you do not have authorization to speak to their providers, their insurance company on their behalf. So it circles back to what I was talking about before, is you don't think of having power of attorney or, this advanced directives, living wills for your kids, your 18 plus year olds, but it's really very important in making decisions. So as I was telling you earlier, talking to Ginny, who works with me, she was like, "Oh my God, I didn't think about that. My son's got allergies and we don't have an authorization on file anywhere in case something were to happen to him." So, that's important. Also, just when they do go to school, depending on your insurance coverage, the school coverage is sometimes better especially if you have in-state coverage only. If they're going out of state, is to really look at those plans, and they're often very cost effective. The only thing you have to worry about is, when they're home, what the coverage looks at, like, especially if they have significant illness or diagnosis. Sometimes people do both. They'll keep them on the family plan because if they have a couple of kids anyway, it doesn't matter if if they have corporate plans or company plans. So those are things to really think about. But the authorizations, if anything, is, I think, the most important, and the power of attorneys. I actually did it with my kids, and I have to remember where I put those, but I just hope I don't have to find them anytime soon. And then I pretty much talked about the last one, which is that a child turning 26 or 29, depending on the state they live in. Basically, looking at the insurance plans, because, for example, the state of New York, you can have an individual plan, a family type plan, and you can choose to have a dependent who's up to 25.
Okay.
Or you can choose a plan that's going to have a dependent up to 29. So you could be on a plan with your children, and one of your children is turning, they're turning 25 in January. So with the open enrollment season coming up, they could change their plan and choose a plan to continue with a dependent who's going to be on the policy until they're 29. Just to, if they're in the scenario where they have no other option.
Right.
The other important thing, and I can probably close on this, is that often when kids move away, if they don't have the job that provides insurance, they often will apply for individual insurance, and they'll show that they may have no income. So when they have no income, then they can qualify for Medicaid state plans.
Okay.
So, which is fine. And, I've got clients who've said, they're fine with their kid going on those plans for a couple of reasons. The only thing I say to people is that if something really bad happens, as a parent, are you going to be paying for the medical costs? Because if you're going to be paying for the medical costs, because you're going to want the best thing for your child or whatever,
of course. Yeah,
you might want to consider paying the premium for a better plan and not having them qualify for a subsidy.
Yeah.
We just did that. I just did that with another client of mine. Her son's actually has a job, or had a job. He's now had the option of going on COBRA or going an individual plan. He's in New York, and he has a significant past medical history. And he's like, "Oh, I'll just go on the individual plan because I'm supposed to get a job within the next, month or two."
Right.
And I said, "Could I just talk to your mom?" And, because she was like, oh no, he'll be fine. And then I said, just in case something were to happen. And she lives in Connecticut, and his former providers for this illness were in Connecticut.
Okay.
And they ended up switching. I said, open enrollment is coming up. You can always change your plan or, whatever you want to do. I said, but for just this time, maybe pay the extra.
Okay.
Yeah. And comparing the cost and the benefit, it was only about $300 more.
Okay. Yeah.
For the COBRA. So
important points for the short term, not just the long term.
Exactly.
Right. Thank you, Anne, for going through all that. There's so much information here, and I know that you can easily dive into these more. You mentioned the classes that you had started. I think maybe recently.
Recently, yeah.
Yeah, talk a little bit about that, because I think some of it's online, correct?
Right. Yes. So, for Medicare transitions, we talk to clients all the time. We have clients we help them through the Medicare transition because it is confusing. And for some people, they have more of a complex situation. So we do one-on-one. But for other people, we have, we do consultations for, people who are just turning 65, and there are so many questions, and it's so confusing to go through the whole process with Social Security and then choosing the plans.
Yeah.
So I woke up and I said, why can't I offer this to more people instead of, doing this one-on-one? Let's offer a class.
Right.
Of course, there's brokers out there, and some brokers are wonderful, and but what they'll do is say, go get set up with Social Security, and then we'll help you out.
Mm-hmm.
And so what we do is we help go through the whole process of enrolling in Medicare Part A and B and explaining the costs, the premium, the benefits. Mm-hmm. And then that's sort of the first phase, getting them enrolled in Medicare Part A and B. Right. Then the next phase is reviewing what are the plan options. Like what plan are you going to go on? The supplement, the Part D, or the Medicare Advantage plan? What are the pros and cons? And then the final class is completing all the enrollments, making sure you're all set on your premiums, understanding all of your benefits, and you're good to go. And that's our Medicare Enrollment Done Right 3-part series.
That's fantastic. How can individuals find the class? Where's the best place to go?
So our website's probably a great place to go because it does have information about the class, as all of our information. So it's healthcarepathfinder.com is the best way to go find us. But you can call us as well. We have an 800 number. We've got local numbers, but the 800-888-511-0128, and my extension's 101.
Great. And I can't thank you enough for all this information. Do you any kind of last thoughts of what we didn't really get a chance to address in the discussion today?
No, it's just, as I say, being aware, prepared, and proactive. I've been doing this for 20 plus years, actually. And I've got, going back to my intensive care, home care, managed care experiences, I just see how it's so important to have someone to advocate and support you as you're dealing with these transitions.
Absolutely.
We have clients who are ongoing just to make sure that we're here to help them manage it.
Right.
But I would just say, just really plan ahead.
Absolutely. And I think that when you think about all of these transitions that we talked about and these life-changing events, it may not affect all of us. We may not have all 10, but I would argue that we have at least a few at some point. So
right.
It's a constant process, I think.
Yes, it is. And I really do think, and it just, you wake up in the middle of the night. If you don't have that, as I go back to the POAs and advanced directives, those are the things that, keep you up at night. You wake up and you go, oh my goodness, just get it done.
Absolutely. And I've said this before on previous podcasts. I'll say it again, is sort of my conclusion. I can't believe how many individuals I come across in my business that don't have a will or a directive or any of these important documents. So I'm hoping and praying that if we can get a handful of individuals that are listening today to say, no, I definitely need to get that done, then I will call this a win. But the information that you provided today is invaluable. So thank you.
Well, thank you. My pleasure.